Welcome everyone. Welcome to the CEMS webinar series. This is the 24th episode already, and it's called Banking the Unbanked. And today we'll be talking about the financially excluded of the world and how microfinancing might help them to gain access to the banking system. This webinar is organized by the CEMS Alumni Association, the CEMS Student Board, CEMS Entrepreneurs, and the Global Office. And the CEMS webinar series is an initiative to provide the CEMS community with learning opportunities and connecting opportunities. So we host a webinar every month, and well, if you've missed any of our previous episodes, you can always watch them back on our YouTube channel. And today we have with us two amazing guests, and the first one is Dr. Sarah Wolfolds from Cornell College, and her research mainly focuses on the interaction between for-profit and non-profit organizations in industries where they coexist, so where they exist together. And one of the topics of her specialization is microfinancing, of course, but in the broader aspect of financial inclusion. And then with us as well is Claudia Belli. She works for BNP Paribas, and she's the global head of financial inclusion and at the Social Impact Accelerator. And she's also a CEMS alumna from 1991. Her work is mainly focused on fostering the environment of social enterprises and of microfinance institutions who provide solutions to these social problems that we will be talking about today. So without further ado, I would like to ask Dr. Sarah Wolfolds to share her slides, and then we can kick off.
Thank you so much. Let's see. Perfect. Can you see my slides okay?
Yes, very good.
Perfect. Well, good afternoon, I believe, to most people, although good morning here. So I'm really excited to be here with you today. As mentioned, we're talking about banking the unbanked, and I'm Sarah Wolfolds from Cornell University. This is my first year teaching in the CEMS program, only our second year of being part of the CEMS community at Cornell. So we're really excited to engage with the alums and all the various stakeholders here today. So my plan is to talk first, kind of give a broad overview about, what are we talking about? What is the issue here? So what is financial inclusion? Why does it exist? Why does it matter? And then jump into what are firms trying to do to address it. So I view this as kind of maybe laying a little bit of groundwork here that Claudia will be able to speak in much more detail about kind of the particular programs that practitioners are using. But I'll talk a little bit about some of the solutions like fintech, different organizational forms, as well as a broader kind of big bank solutions. And then I'll talk a little bit about my own related research, which is, as was mentioned, is really interested in how different types of organizations, different organizational forms think about trying to address issues around financial inclusion. So what is financial inclusion? So as you see here from this World Bank screenshot, certainly it's an important thing, right? They say financial inclusion is a key enabler to reducing poverty and boosting prosperity. And Accion, which is one of the largest microfinance networks, this is kind of a little bit of foreshadowing of some of the later discussion, has now shifted slightly in their mission. So you see here that we harness the power of digital technology to create a financially inclusive world. So you certainly see that fintech is probably increasingly part of this area in general. But what do we actually mean by financial inclusion? So generally what we're talking about is people that are either unbanked, which means that they do not have a checking or savings account, or underbanked, which means that they may or may not have a banking account, but they also obtained some sort of services or products outside of the banking system. So this varies a little bit by country in terms of what underbanked actually means. I think broadly, you can think about it as kind of the use of loan sharks or kind of alternative financial systems. Here in the US, we actually have quite a lot of different types of alternative financial solutions. So, one of the things that is common, I think, in many countries is something like a payday loan, which means you expect to be paid on a Friday, but you have some bills earlier. And so you take out a loan on Monday to pay those bills, paying them back on Friday. The issue with many of these alternative financial services is that they're very, very expensive. So you're paying incredibly high interest rates on those alternative financial services. And here in the US, you see that about 7% of households are unbanked, which means that they do not have a formal relationship with a financial institution. And about 20% are underbanked, so use one of these alternative financial services. So what's happening a little bit more globally? So this is something that a lot of development organizations care quite about. What I want you to focus on this slide is on the right-hand side. And I'll update you a little bit in terms of the numbers in 2020. But what you see is that over the last decade, there's quite a lot of improvement made in terms of people that are being reached. Meaning, you see in 2011, it was about 51% of the global population was banked. And by 2017, that number had gotten to 69%. So this slide, shows you where these people fall. And so again, this slide is a little bit old. So this one says 2 billion people lack access to a transaction account. And that number is slightly different to today from what it is today. And so that reminds me, actually, if we want to go ahead and launch the first poll so that we can see maybe how close people are in terms of where they fall in their knowledge about unbanked and underbanked. So sorry about that. So I'll give you just a couple minutes if participants want to take a guess. So the first question you see is microfinance just for the developing world? Yes or no. The second is how many people are unbanked across the globe? Is it 250 million? So this is today. So as I mentioned, this slide that you're seeing right now is a little bit old. So how much improvement do you think we've seen or since 2014? And then the third question is, should commercial banks address financial exclusion? So just so you can see what folks see. So the vast majority say it is not just for the developing world. The 75% of people were correct that it is 1.6 billion that are currently unbanked across the globe. And the vast majority also think commercial banks should address this issue. So a good audience perhaps for our next speaker. Okay, so thank you for answering that. So basically, what you see in this graph is in this picture is that the location of where people are unbanked is not kind of equally distributed across the globe. So there are some places which are essentially overrepresented in terms of how unbanked they are relative to their population. So one reason that we care about this is essentially that the gaps in financial inclusion are exactly among folks, households that might already be at the greatest disadvantage. So in particular, younger people, less educated people, lower income people, rural residents, and women are all much more likely to be unbanked. The same kind of trends that you saw geographically across the globe applies in the US. So what you can see here is that there's quite a kind of central of unbanked population in the Southeast. And that's in fact where inequality is highest in the US as well. So in terms of starting to think about the solutions here, it's helpful to understand why people are unbanked or underbanked in order to come up with solutions. And so a lot of people talk about issues around trust, but in fact, we see that by far the most common reason with 57% of the population is that they don't have enough money to keep in an account. So you have to remember, this is the answer they're selecting. So they that may be partly education, meaning they don't think that their accounts exist to serve them. But this is certainly the perception of why they do not have accounts. So in the US in particular, another thing that we see is that in some cases it is an issue of access. So there are banking deserts, certainly in the US as well as across the globe, where it's actually very challenging to reach a branch of a bank. And I'll put these numbers up. I won't go through them in detail, but I put these up just to say that it matters quite a lot because people pay a lot of fees when they go to these alternative financial services. And so if we're able to include people in the formal banking system, it would mean that especially those very disadvantaged groups would have more money that they'd be saving in fees in order to essentially, purchase essentials for their households. Okay, so what are some solutions here? So one solution that's certainly getting a lot of press recently is fintech. It continues to be a very popular solution, and I think definitely a part of the solution. And why do I say a part? Well, because Unfortunately, a fairly high percentage of unbanked people do not have mobile banking, do not have a mobile phone, excuse me. And so, sure, you could reach 63% of the population, of the unbanked population, but that still leaves quite a large chunk that would not be able to access it via a mobile device. In addition, people that have very low household incomes generally prefer working in cash. So perhaps education is part of the process here to get people more comfortable with non-cash solutions, but that's going to be a longer run solution. So in the short term, we need to be able to serve these people in a way that works for them. So one such idea is things like walk-in cash payments or self-service kiosks. So basically, put essentially a mobile bank or have the actual cashier at a 7-Eleven able to deposit money into their bank account, right? Things that improve access. Another such solution is organizational forms. So this is broadly where you can think about microfinance often fitting in a hybrid organization. We also have other sort of legal forms here in the US, such as the CDFI, which is the Community Development Financial Institution. So basically the idea here is that you provide some sort of organizational form where they don't have to explicitly maximize profit, which is an issue many companies come across in the US. And so that's exactly what this type of organization does. It says you can actually have a focus on a mission or community development outcome. And so here in Ithaca, which is where Cornell is based, we have one such organization called Alternatives Federal Credit Union. And what you can see in their community programs here is that they have quite a lot of different solutions to help people. So they have free financial counseling, they have free accounts, they offer courses in financial literacy. And you're starting to see some of those solutions in big banks as well. So for example, this is just a screenshot of Bank of America. So you do see that they have a number of programs that seem to be trying to address community development or financial inclusion, with the caveat that they don't always follow through. Banks don't always follow through. And so I'm really looking forward to Claudia's discussion because I think they've done a very good job on actually following through on some of these initiatives. So I just highlight this as it is hard for large commercial banks that have profit motives to kind of consistently follow through on some of these issues. So Bank of America ended their free checking option, which was obviously a very good option for low-income populations. And another issue, for instance, is overdraft protection, which unfortunately has high fees, which are passed on to consumers. So I'll really briefly, just in a couple of minutes, talk about some of my work in this topic. So where I'm really interested in here is when you think about microfinance organizations, you think about organizations that have both financial and mission outcomes. And so how do they think about structuring their products and services and their own business practices to best pursue those goals? And so in particular, one of the big issues that's been of interest is what happens if microfinance organizations mission drift, meaning that they kind of go away from their mission goal and focus on more of a financial goal. And in particular, if they offer certain commercial practices, are they more likely to then mission? And so that's exactly what I do in this paper here, is to try to understand, in this case, whether or not the adoption of deposit taking, meaning that they will accept deposits, leads these organizations to mission drift. So of course, the setting is microfinance. What's really interesting about microfinance is all of these organizations are hybrids, which in academic literature, that just means that they kind of have financial goals and social goals, right? Very explicitly in their missions. And so, and of course, why that's challenging is that you have to balance those two goals and kind of do them both simultaneously. So what we study here is we basically say there's one side of this organization that would say some of these NGOs, these microfinance NGOs that I'm studying in Latin America, some people think, well, if they adopt commercial practices, they're going to suffer mission drift because it's going to be hard to offer more commercial activities along with their mission goals. On the flip side, other folks say, well, in fact, they may be better able to serve their mission because they'll essentially have more resources, right? They'll have more scale, they'll have more money that they'll be able to serve customers, serve their poor populations better. And so this is really relevant in Latin American microfinance, which is where I study it, because all the early players in this industry were very small NGOs that made very small loans. And then over time, you basically saw an increasing diversity of organizations. You saw some commercial banks enter the space, or these specialized microfinance banks called NBFIs. And And one of the things you also saw was that these organizations in the early period of microfinance did not accept deposits, and over time began accepting deposits quite frequently. And so, and the concern, of course, was at the same time you see average loan size increasing. So the concern was that, are these NGOs, deciding to accept deposits and then at the same time deciding to basically make larger loans to wealthier customers and mission driven? But interestingly enough, what I find is that I find support for the second part of the hypothesis, which is that these nonprofit NGOs actually lower their loan size after accepting deposits. So they don't seem to mission drift. Deposit taking does not cause them to, massively mission drift, but in fact, the opposite. And the interesting part of this is that it does not seem that they're using deposits to basically fund their mission operations, but rather they're offering very, very small deposits to basically bring people into the financial system, right? So exactly what we're talking about now. So they're not just accepting loans, but they'll actually have checking accounts essentially with these microfinance institutions, which I won't go into it in more detail, but basically what I study here is there's a regulatory change that allows these organizations. So really important because it basically suggests that nonprofits are actually better able to serve their mission. And so it's really helpful that the regulations basically changed and allowed them to begin accepting deposits, because now they can allow those people to be formally more included in the financial system. So I have more work that I can plan to continue on in this area. So I'm doing a field experiment with a microfinance organization in Bolivia, where we're studying similar ideas in terms of human resource practices. So if you have performance incentives for your loan officers on kind of mission-based outcomes, as well as your more kind of financial or loan performance outcomes, how does that affect the ability of your loan officers to actually do successful mission-oriented work? So I'll wrap it up there because I want to make sure Claudia has enough time. So obviously happy to follow up. I'll be on the rest of this webinar and answering questions, but feel free to send me an email as well. And with that, I will end my presentation. So thank you.
Thank you very much. So in the meantime, while I share the other presentation, do you want to launch the other poll?
That'd be great. Thank you.
Right, so the questions here in this poll, if you're able to see it, yes, you are, great. They're more focused on the talk that Claudia is going to give you. And it's more focused on financial institutions and the average amount of microloans in, developing countries and developed countries, which Claudia is going to talk about more.
Thank you. Thanks a lot, Professor Wolfolds, because very, very interesting. And even if when we work on this, it's always very good to have a global profile and the view of a researcher. So frankly, very interesting. So on my side, I can just share the view of a banker of global commercial bank. So maybe, BNP Paribas is the largest bank in Europe, and we have 200,000 employees in kind of 70 countries. So quite a big bank. And in our corporate social responsibility mission, we have set, and if you can go to the second page immediately, we have set that the fact that the civic responsibility is compulsory for us. It's very important. We want to be the agent for a positive change. And among the commitments that we have set for ourselves, we have the commitment that where we are, we try to make our products, our services as widely accessible as possible. And this means that each year, we are asking to each business line in the world, to each country in the world, we are asking on each of those 12 commitments, and including that one, where they stand. So it's really something that is not only a wish, but it's something more than a wish. And now you can see the results and how we try to foster financial inclusion. So I'll propose two small parts, one about microfinance, so financing the mostly excluded, and then a part of fight against the exclusion, what the products and services can do specifically in the businesses. So let's go to page 5 if you want. Well, I thought it was 1.7 billion adults, and so thank you, Sarah, because it's 1.6 now. I'll change the slide, but there are 1.6 billion adults which are lacking financial services. So this means it can be in some countries the lack of a bank account, but in many other countries, it's not a matter of a bank account, but it's a matter of any kind of financial services. So they require a loan, they can have it. They require an insurance, they can have it. They require any kind of service of sending money, receiving money, or depositing money, and they can't have it. So this is the whole, and it's, you see, it's really a huge amount of the population. So we think that financial inclusion is very, very important. And so we started to say, what can we do specifically to the unbanked? So for the unbanked, we say, well, if they were clients of us, well, that means it comes to the second part of the presentation, but they are not, and we cannot finance ourselves. Maybe you can also say, but why not? I mean, and when you, many of the clients, we decided to work with microfinance institutions. Many of the clients of microfinance institutions are there because they wish to become clients of a bank. So for us, it's really the matter of the inclusion. And so we decided to work with the microfinance institutions because they are the ones who know how to do it, who have usually the possibility to have mentors, helps, to have donations, to have more support of the civil society. And so they really can go where the industrialization of a bank account cannot do it. So we decided to work with them, and we know that it's very necessary because a microfinance institutions, we call it also MFI, it's not a bank. The day they become a bank, then they don't need us anymore, and they don't need any specific lender anymore, because the day they become a bank, they are going to refinance their loans into the interbanking system, while on the early years, I would say even sometimes even for 20, 30 years, they are not a bank, and they have a huge difficulty to be able to get the money that they are going to on lend. So it's very, although you can say, well, you're too far away from the person who is in need, we have understood that we can then provide a loan under a normal standard interest rate. So we can provide them loans in the countries where we are present. And so we are going to provide loans in the local currency, so decreasing the cost for them. And then they're going to be able to on lend and do all the specific banking services that an unbanked needs. You see? So then we decided to work also in some innovation, but we're going to talk about it. You can turn the page, please. So what we are doing today in investment and financing into MFI, microfinance institutions, in kind of 15 countries, which is where we are and where there is a microfinance ecosystem which allows MFIs to receive a loan and to be able to repay the loan. We are working as lenders or investors. It's not philanthropy. So it's purely under the banking system. And we achieved to do this because we have a specific credit policy dedicated to microfinance. We go to standard credit committees in which the risk persons in front of us are also trained to what a microfinance institution does and how to understand the balance sheet of a microfinance institution in order to assess if they are able to repay us. You see, so it's really a very specific and small, quite small, because the MFIs are small. So even our loans are quite small, because the loans we provide are from 1 million euro up to 30 million euro, depending on the size of the MFI or the country of the MFI. And if you see the figures of end 2020, we achieved global support of microfinance of 375 million euro, of which 280 something, it's loans, lending that we do with a standard due diligence, with analysis of the social performance and the analysis of all the criteria of the microfinance institutions, so to be sure that they are not making any mission drift, that there are not any problems, nor financial nor social. And also, thanks to this policy, last year, 2020, Euromoney, which is a very recognized and well-known magazine for the whole financial community, recognized us as best global bank for financial inclusion. So we were so happy for this, because it really was the proof of a very, very long-standing engagement. Very long-standing because we started supporting microfinance 32 years ago. We started with the Crédit Rural de Guinée in Africa. 3 years after, we continued with ADI in France. It never stopped, and then it increased in higher dimension kind of 5-6 years ago. So if you then want to understand a little more, you can see in the next slide how we supported this. So we also tried to see, we said, yes, we had done 293 million euro of loans, exactly. And this was an outstanding year end, but when we accumulated the outstanding of the loans that we delivered during these 32 years, we get to 2 billion euro of loans accumulated. And 90% of this was on lent to women. So this is why we can say that 1.8 million women have benefited by our financial support. So indirectly, we always lent to MFIs, the MFIs lent to women. And in the chart, you can see where we're doing it. So we need an overlap between our presence as a local bank, being able to lend in local currency, and a presence of a good and safe ecosystem of dedicated to microfinance. If you go to the next slides, you see how we handle this lending to microfinance institutions. So we lend and we really use the commercial bank. So we don't have a budget, we don't have a subsidy, we are not working through a foundation. We are really making a huge selection with all the tool of the bank. And the selection is on transparency, on the financials, on the audited accounts, on experience. So whatever you would do in any financial institution, but then also we add the study of their social performance. If you go to the next slide, you see what we use. We use a tool which is kind of probably the most recognized global tool. It's called SPI4, Social Performance Indicator, has been done by CEMS and now with the Social Performance Task Force, the SPTF. And they really do a huge work going into each dimension of social performance. So how they treat their clients, how they do the recovery of the loans, how they treat their employees, any green microfinance product they propose and how they propose it. So it's very large. And by the way, we are very proud because each year we assess the performance of the MFI, the microfinance institutions we lend to, and we try to see which is the average score of the 400 MFIs scored by CEMS. And this year we achieved 79 on 100, while the average score is 63 on 100. So this means that we're not only selecting them because they're good on repaying us back, but we really select them because they are really doing very well what they aim to do. Then also, this is just a matter, something that you can make in your weekend. If you see that link is, and you can Google it as a BNP by Microfinance 30 years, Little Big Movement. And it's a digital exhibit. We did it for our 30 years in microfinance. And we wanted to give the award to women financed by the 30-something microfinance institutions we work with. So we went there or we ask them to provide the pictures and the stories, and you see many videos, and I encourage you to go. It's a very pleasant moment, and you can really feel what microfinance is doing. In the next slide, you see something which we are developing right now, which is the green inclusive finance. It's because we, as BNP Paribas, we are very committed on climate change, on avoiding climate change, on trying to reach the 1.5 degrees, and we're making all our policies working on that purpose. And so in the team of microfinance, we're saying, well, what about the very, very, very small step? The smallest of the smallest are often the microfinance smallholder farmers, the ones who are really raising their potatoes, their onions, and who are suffering maybe the most of the climate change. So we started, and 2 years ago, we worked with the UNDP, and we developed this MIBA project, the Microfinance for Ecosystem-Based Adaptation, in which we work with experts and with some MFIs who decided that and understood that if they help their clients to better adapt to climate change, then even their risk is better. And so we work this with UNDP, with Yapo Solution, a small startup in Germany, and we developed something which is now used in those tested MFIs. And then we are now part of the European Microfinance Platform, who has an action group dedicated to green, inclusive, and climate smart finance, because it's really something that has to be developed not only alone, but with all the coalitions. And then in the next page, you see that we then decided to start a coalition with other lenders, in which more lenders are welcome, that we call the Climate and Biodiversity Initiative for Smallholder Finance, in the sense that it's not, we went from the climate change to the adaptation to climate change, and now increasing the biodiversity. And so in this initiative, we try to see which are the tools that we can provide to the microfinance institutions so that their clients can increase the biodiversity. And then now we're also on the very last step, or maybe not even last, but one of the last step for the moment. We are now creating, together with the GEF, the Global Environmental Fund, we're creating the Climate and Biodiversity Institute for Inclusive Finance. So you see, it's very, very, very wide. Then, as another example of the innovation that you can find into microfinance, is the AgriFed program, in the next slide, in which we've been working with the UN Women, who are saying there are so many women in Senegal who are struggling to become climate resilient towards climate change. So we work with them, and they provided training, expertise, products, accessibility to the tools, and they also said, what can we do? And so we said, well, let's work with one microfinance institution. In this case, it was Baobab Senegal. And we provided a specific loan that they're going to on-lend to the women who are receiving the trainings by this AgriFed program. So you see there, it's really multi-layer. And each time you can say, what can we do? And then it's a matter of resources, timing, and willingness of the people, of our people, because each time we don't work alone from Paris. Each time we work with some bankers who add to their banking route the fact of banking also some microfinance institution. And now I'll go to Nickel. Nickel, I would say it's the same concept, but applied to the opposite. So it's not about financing the unbanked, but it's about providing banking services and possibility of deposits and a credit card to the unbanked. Because Nickel has been developed in France. It was a startup that BNP Paribas bought in 2017, and it's now becoming a very, very wonderful startup with many people, because now they are having, it's 1.9 the slide, but now they're already achieved 2.2 million Nickel accounts. What is a Nickel account? Well, it's very simple. product, if you just think about it, is that everybody can go to a tobacco shop, a tobacconist, and which is good because since and we are very active in stopping any activity related to tobacco, and so these tobacco shops, they were saying, okay, guys, we were not surviving anymore if there is no tobacco sold. And so we said, okay, let's have nickel selling the products to tobacco shops because they are all over in France and all over also now in Spain and in Belgium where they're developing. So it's a matter of anybody can open a bank account, has a prepaid card, credit card, and IBAN. And so immediately you have IBAN card, and then you can deposit the money. And so it's incredible because 75% of the clients of Nickel earn less than the French SMIC. French SMIC is a minimum average income per month, which is 1,500 approximately per month. 79% of the clients, imagine. And imagine also that 30% of their clients don't have a household, don't have a house. They're living in foyer, they live with friends, they live in the streets. So you can see how huge this financial inclusion tool is. And it's really, as the microfinance institutions, they are not philanthropists, they are social enterprises, they're social businesses. In the next slide, it's in French, but you see, for the ones who speak French, it's interesting. They say, we all need a bank. No, we all need an account. And so they propose an account and an IBAN in 5 minutes. So it's quite interesting. We're very proud of the result of this startup. I don't know if you want have some questions, or I go to the products and services that the bank is providing through their standardized other businesses. So through the retail branches in France, in Italy, in Belgium, in Luxembourg, and through the insurance and through personal finance. I don't know if you have any question, otherwise I go ahead. Maybe I go ahead. Is it okay?
Let's go ahead. Yes, yeah. That's fine.
Perfect, okay. So you see, the first part is about microfinance. It is a banking service, but it's very specific. So we are not going to earn a lot of money out of it. We just earn enough to cover our costs. We do it because we want to. It's really an engagement. In this part is whoever our bankers are, they see the need of increasing the financial inclusion and fighting the exclusion of clients. And so they develop specific services, specific accounts, so to be able to widen up their clients and increase the inclusion, you see? So if you go to the next slide, you see, I just gave some ideas of what can be done. So the accessibility of clients with disabilities. So each year, each retail bank tries to increase the accessibility to people with disabilities to their branches. Or in Poland, where we have BNP Paribas Polska, they have even won an award, which is the Accessibility Leader in 2019. When you see Cardiff is an insurance, so they try to develop support for person who try to have an insurance but has a temporary disability, and usually they cannot have any insurance, so they develop specific products for this. Or another example is in Taiwan, whenever a client has an accident, they should claim for the insurance, but if they have an accident, maybe they cannot claim for the insurance. So the Cardiff employees propose to go at their house and so help them to do all the procedures. So you see different kinds of accessibility for people with disabilities. In another way, also there is what about fragile clients, clients with the financial difficulties. And so in this case, the retail bank in France has prepared products and advisory to clients who have a problem really to face the end of the month. So they propose budgetary solutions. And they also, with personal finance, which is the consumer finance, they have a specific target of fighting over-indebtedness. So they really follow very, very strictly all the clients, and they propose specific solutions. Just as an example of what did personal finance, last year during COVID crisis, so when nobody could really have so many people who receive a consumer loan could not repay them, and personal finance did a restructuring of 1 million personal loans. So 1 million of clients who were having a loan to finance, a fridge, a TV, or something like this. So it's not microfinance, it's consumer finance, but they really try to do their best in order to fight over-indebtedness. When you go to the next page also, you see other examples of the insurance, which is simplifying medical formalities, which is insurance to protect the carers, because the carers of someone with disability suffer terrible overload of difficulties, of psychological and time difficulties, and so they did specific products for them. Also, Cardiff has pushed Tilia pour les aidants, a social business that has been created by a person of the group, as entrepreneur of the group, which has been accompanied by an entrepreneurship program, and then has been accompanied by the Grameen Creative Lab, so the Professor Yunus consultancy, and has created a social business dedicated to helping the carer of trying to keep their professional life while helping a loved one. So you see, each business line is really saying, what can we do? For sure, we can do more. And they try to do something more. On the right-hand side of the slide, you see Axel. This is very interesting also because it has been created in 2020 and has been created by working with NGOs which are working with youth and with customers with financing difficulties. And they said, it's not only about proposing banking services, it's also proposing so many other services. And so we work together with Orange, it's just in France for this moment, but with Veolia, with Renault, so with Danone, with very, very many companies. And we propose to the ones who are fragile, so our ticked as fragile customers, they propose very, very, very low prices for their services. And it's a very interesting offer. And then in the next slide, you see what we can propose to youth, to young people, because as you were saying, Sarah, there are so many people who are unbanked, and many of them, although for you who are listening, you can be surprised, but many of them are young people. It's not because you are young that you are digitally native. So many are also young, or many old people too. And so we propose specific services for the young people. So in one case in Italy, they are proposing specific loans for students for a higher amount. Everybody is proposing loans for students, or very high skilled students, but whenever you go beyond, I don't know, 5,000 euro loan, it's immediately difficult. So they propose specific products for high expensive student studies. In France, they propose the credits for helping students to get an apartment, a rental, and so without any guarantee. In France, they also worked with NGOs working with youth, with the students, and with people coming in from the suburbs of Paris. And they understood that they could be mentored. And when they are mentored in their studies, they become more proficient. And if they are mentored, they could receive a loan without any guarantee. And so they proposed loans of that kind for more than 5,000 students at a 0% interest rate. Or in Morocco, where we have a retail bank, the BMCI, they proposed specific loans dedicated to this kind of students. So you see, when you talk about the non-bankable, it's one thing, but when you think about difficult to bank or differently bankable, then you widen up the solutions. And then we also can think about the importance of financial education, which is really, this is less atypical, probably, I believe, or that all banks propose many services dedicated to financial education. And of course, financial education is very efficient to fight over-indebtedness. It's very important to help people to manage the budget. It's in the next slide if you want. And it's very important. I mean, my personal point of view is that financial education should be a must in the curriculum of any high school student, because, or even earlier, because you cannot talk about finance if you don't know what it is. You cannot handle a budget or your money if you don't know how to use it, how to understand the costs and the relationship between what you spend and how you spend, how you invest, how you achieve, etc. So my point of view is that the fight of over-indebtedness and the fight of financial exclusion comes through educational programs. And here there are some specific projects, specific programs which are done as a pro bono by our people in the schools, in the universities, but not only, also in the communities. So to make workshop and training more people into what financial education is. And when we think about Promoto, you can change the page and you can see a specific interesting project, which is the 1 million hour to help, which is that we are engaged and we want to achieve, but with the COVID it had been difficult, into providing pro bono at least 1 million hour from our employees on their paid time. So it's done through lawyers working pro bono to social enterprises. It's done by employees mentoring students. It's done by full-time employees. Like in France, there are 175 employees full-time, dedicating their time and their expertise and paid by the bank, and they're working in NGOs. So you see, it's a huge variety of options, of possibilities. And well, this is it. I'm not even going, because there are just 10 minutes left, I'm not going to the last slide, which is the philanthropy, not because it's not necessary, but just because I wanted to focus about the banking, the unbanked. And so this is really, whatever we've been talking about was really about banking services and banking products. I'm free for your questions if you have any.
All right, thank you very much, Claudia. That was very, very interesting. There's been a question coming in about nickel you maybe could answer. It's from Leon, and he asked, how does having a nickel account help these unbanked people out of poverty? So like if you have an IBAN number, what can you actually use it for to get out of poverty? How does it help them?
It's a very good question. On the beginning, I was thinking of the same, saying, well, I can open a Revolut account and that's it, you know? Or Hello Bank. And actually, no, it helps because Nickel has been working, as an example, with French authorities to help providing a bank account, good bank account with KYC, know your customer and everything, even to people who do not have a house. Because the problem is that when you do not have any house, you can't have a KYC, so you can't have a bank account. So this is an example. The second answer is that also when you live in the streets, when you don't have anything, you have your money with yourself. So you are fragilized by thieves, you can't sleep, you can't, at any moment there you are in danger. And so you are really facing many more difficulties than anybody else. And you need a digital bank account sometime, but if you have I say Revolut account, it's not at all BNP Paribas, but you have some cash that you have earned through little jobs somewhere in the streets, and you have to convert it somehow at some point of time. And then in this case, you go and you put the money, the cash money that you have at this tobacco shop, and which credits the bank account.
Yeah, that makes sense. Makes sense. Thank you very much. Sarah, you briefly talked about regulatory changes that allow those hybrid organizations, and I wanted to touch upon that a bit more because it seems to me that the government could have a big role in this, because as Claudia talked about, you know, BNP Paribas is financing these institutions, not because they make profit, because they need the money, right? how do you see the role of the government in banking the unbanked?
That's a really good question. I think the role of the government is to help facilitate things like what's being done here, which is not making it hard for commercial banks to finance microfinance organizations, right? Allowing that to be a natural partnership. And this varies a lot by country. And so you also, I think one of the big hurdles that banks are certainly no foreigner to, which is that it's really hard to operate in different countries because there's different regulations in every single country. And frankly, it would be useful to have a little bit more global cooperation in terms of that to make it easier for partners in various countries to work with large banks. But yeah, I mean, it's a good question. I think, there's still research to be done, frankly. I have my personal views, but from a research perspective, there's still a lot of research to be done to say, what is the optimal role of government in this, right? Should they be more directly intervening or not? I think that's still largely not understood from a research perspective. I'd be interested in Claudia's thought as well.
From my perspective, it's as you say, depending on the country. But I would say in emerging countries, we actually need to have credit bureau. Credit bureaus helps to avoid any over-indebtedness. This is for sure. Then governments can also help to decrease the problematic of having MFIs considered as banks, but not earning as much as banks. And so decreasing the regulatory, keeping the security of what they are doing, but decreasing the regulatory information that are needed. Then I would say also in some countries that we see, like in India, Indonesia, they are likewise the CDFI in USA and Canada. We see in those countries, India, Indonesia, they have done something very interesting. They oblige companies, large corporates, to have a certain percentage of their turnover dedicated, invested, lent, or supporting the financial inclusion. And so this helps a lot because it's not only that we want to, but we have to. So our banks, for example, our largest clients are MFIs in India. And it's also because this helps ticking the box about this regulation. And so it's easier to convince to go into such a difficult and small scale. Also, I would say in the high income countries, this loi Aliagon, it's a French law that allows companies to consider the pro bono activity on a long term of their employees as a donation when they are to NGOs. And so when you think about microfinance institutions which have the legal status of NGOs, which there are many, having them enabled to have long-term employees which are skilled financial sector employees, this would also help. I mean, these are the first ideas, but then there is about enhancing impact investing, enhancing the possibility to have investment into microfinance, into all the financial inclusion. And this is also something that has to be regulated. So I believe that governments can play a good role.
Yeah, I think I'll just chime in to second what she said about credit bureaus. So that is where the research has been pretty explicit, showing how important credit bureaus can be, because there are so many different microfinance organizations operating in the same country that there is a practice of borrowing from multiple different organizations, and they don't know what the other one is doing, and leads to very heavy over-indebtedness. So credit bureau seems like relatively low-hanging fruit here for governments to really invest in.
Yeah.
Okay, thank you very much. We have one final question before we wrap up, and it's from Sophia. She asks, do you think that the pandemic and the current trends of moving to these digital platforms that we already talked about a bit will affect the unbanked population in a negative manner? So as we talked about, like in order to access these apps and these digital platforms, you need a smartphone, you need access to internet, but a lot of these affected population do not have access to these materials, right? So how do you see that development going on? Maybe Sarah can kick off.
Sure. I mean, I would say there's pros and cons, right? I mean, there are still a substantial number of unbanked people that are do have access to mobile devices. And so for those phones, I think for those people, excuse me, the switch to more financial solutions may be very good, because a lot of the issue is around scale. And so it's hard to scale physical locations in all of these rural areas. So I think there's going to be a lot of positive impacts there, to the extent that branches are being closed, particularly in more urban areas or in areas where it's harder to be accessible. I do think there could be some negative consequences. We'll have to see how it plays out. My guess is in the end, it'll actually be a net positive, a net gain, particularly as more and more people get mobile phones. But certainly it's not going to be, not every single person will gain. But I think on average, I work with a microfinance organization in Bolivia that did not have any financial solutions. Now does a substantial amount of their work with using fintech. And it's been enormously positive for them. They've reached a lot of new borrowers. So I think this is likely the more common outcome, but I'd be interested in your perspective, Claudia.
Yeah, I perfectly agree. But still, we saw that in India, there, because of COVID and because even though there was a dematerialization done by the government, it was still not enough. And so there was a massive crisis. They are not yet recovered. So for sure, it's helping, and it's helping enormously, but we're not yet at the level that all the clients are using the digital solutions. So it's a help for sure. Yeah.
All right, thank you very much. Unfortunately, the time has run out. We're at 4 o'clock here. So I just want to say a huge thank you to both Claudia and Sarah for, well, spending your morning and your afternoon giving this talk, giving these insights. I think it was very interesting to have like both the academic perspective and, the perspective from a banking institution. So thank you very much. Unfortunately, we cannot give a round of applause, but well done. Thank you very much.
You're welcome, and thank you for inviting us, and thanks for your interest in the topic of financial inclusion. So very glad that everybody were there and listening to this. Thank you.
Yeah, thank you so much. Thank you for speaking with me, Claudia. It's really enjoyable to hear your perspective.
Yeah, mine too. Thank you. Bye.
And before we depart this afternoon, to the listeners, we have a few more announcements. So after this webinar ends, you will get a pop-up message where you ask to answer a few questions that will help us to develop this webinar series. And if you have any ideas about future speakers, ideas for topics, you can also leave them there. So that would help us a lot. Then for the alumni among us, I know there are a few of them. The CEMS Alumni Association also published an app recently, and you can use it to do networking, lifelong learning. You can stay up to date about events. You can connect with people. So if you're interested in that, please download the app and check that. Then the CEMS entrepreneurs who have helped us also organize this webinar, they're organizing a CEMS Startup Challenge. This is more for the students, obviously. And that will happen on November 9th, and it will happen during the CEMS Career Forum. So if you want to see successful students pitch their entrepreneurship ideas, then you can join the session. It's going to be a lot of fun. And then finally, the CEMS Alumni Association also recently opened up donations. So if you want to make a donation to the association, you can go to the link that's being shared in the chat now. And you can help support the association by donating to the mentoring platform, the startup incubator platform, leadership seminars. You can also choose to help these podcasts and these webinars. So if you want to check that out, you can visit the website cemsalumni.net. So with that being said, thank you very much for being here today. And if you have any questions, you can leave them in the survey. So yeah, have a nice day, and thank you very much for joining.